Okay, everybody, here we go. It's me, Gregory Mannarino, Thursday, December 14th, 2023, and this is my pre-market report. People, just as we expected, and this is an incredible thing to witness in such a short period of time, the U.S. 10-year yield has fallen below 4%, and the dollar is getting slammed. I want you to think about what I'm about to say. We went from, honestly, the most vicious bear market in bonds in history to what is now the most rip-roaring bull market in debt in history. And this, people, has put a fire underneath the stock market, and nobody, except you and me maybe, are questioning the timing of this. Let's talk about the timing of this. So, as you and I have spoken about for I don't know how freaking long, and I have explained to all of you how this works. Again, you have the fat cats at these corporations whose livelihood, okay, depends on year-end stock price. They get their multi-million-dollar bonuses based on year-end stock price. So just yesterday, new record highs for this stock market, and it's going higher. Again, you got, of course, a big sigh of relief from the Wall Street fat cats, the corporate fat cats, who are now getting their multi-million-dollar bonuses here. And of course, this is just a game that the Federal Reserve plays along with, our so-called policymakers who have nothing better to do. All right. Elizabeth Warren, I'm going to tell you again, is on her crusade to stop cryptocurrencies because they're used to fund drug deals. Oh, what happened? Listen, before the existence of cryptocurrencies, and what still remains today the number one currency used to fund terrorism, to fund drug deals? Yeah, it's the U.S. dollar. But oh no, Elizabeth Warren and the rest of those freaks that are congressional representatives who are now signing on to whatever bill that Warren wants to put out to present to all of us and have us forced to live under their rules. They want us in the Federal Reserve dollar. They want us in Federal Reserve notes. Anyway, look, what we're seeing here, a phenomenon that you and I knew was going to happen, and we haven't seen anything yet. Let's talk a little more. Not only do we have a 10-year yield sub 4% and a dollar falling off of a cliff that is putting quite a fire underneath this stock market. Again, remember, the fat cats got to get their bonuses, year-end bonuses, and that's funny. Like I said, no one's questioning the timing here. You got silver right now up almost 7% this morning. Gold catching a bid. Cryptocurrencies catching a bid. Crude oil catching a bid. Crude oil, people, look, yes, indeed, my year-end target has been way off on this, but there is no way on this earth, off this earth, or anywhere else that crude is not going much higher. It is. This is a game that is being played via OPEC and who knows what else they're trying to do here to pump and dump this thing, this whole Wang Tango, Can Tango thing going on. Okay, whatever. Just be ready for what's coming. I'm going to tell you again. Come 2024, people, what you could count on is central banks buying it all. They've already been buying it all. Again, do you think this is actually the regular guy or the regular girl going out here buying all this debt right now? We had a 10-year yield over 5%. Now we're under 4% just in a matter of a few weeks. You think that's just just happened by chance? No, people. Anyway, I want to explain something else to you. I want to talk about something else that's going to happen here. You're going to see lockstep. Okay, what do we know is going on? Central banks collectively, what do? They run the economy. They run the financial system. They run the financial markets. So collectively here around the world, you're going to see them move in lockstep. The Federal Reserve, as we all know, they're done. They're done. And if I didn't say it, done with regard to raising rates. They're going to be cutting rates come 23. And it doesn't matter what happens to the economy. We have an economy that's dead and it's buried, a consumer that's dead and buried as well. People tapping into home equity to try to make ends meet, burying themselves in debt they can't possibly pay back, with debt default skyrocketing across the board. Another thing with regard to the timing here. Again, we have watched another phenomenon occur. Investment banks who have loaded up on government debt, they watch their balance sheets evaporate. Okay, now that yields are dropping, they're watching the value of those balance sheets go back up. Do you see the game? Do you see how this is being played? But no one's being told anything about this. No one is going to let you know, from the propaganda ministries to anyone running for president. They can't tell you how the system works, and they can't tell you how they work for the system, even though they're going to try to convince you that they don't. Of course they do. All right. They know where this is going. Everyone running for president, all of our politicians understand what's happening here. The central bank is the real government, the Federal Reserve in this case. They're dismantling the system. They're going to issue in a new system. They're going to vastly reduce the population as well. Trust me on this one. I don't know how they're going to do it. Maybe they're already in the middle of doing it, if you get my drift here. And this is going to get a lot worse. Something else is coming down the pike. And not only that, we're going to see in 24, I think, the final pump, where, central banks are going to buy it all, solidifying their position here to be the lenders and buyers of a last resort. I can't imagine right now a better spot to be in than precious metals, gold, silver, especially my favorite asset of all time. We have a stock market that is so... How do I say this in a way that people can understand it? Because I don't know how to word it. The stock market is so detached from any kind of reality right now. Again, the promise of more easy money is starting FOMO, fear of missing out. I expect the stock market to go higher and higher as central banks around the world conspire to cut rates moving forward. They're going to pause. They're all going to start pausing. That's going to be just a miracle as well, the timing of it, and then we're going to get these cuts moving forward. The central banks of the world already have the economy where they want it. The central banks of the world have the consumer where they want them. Again, this is a neo-feudal system that they are creating, and then they're going to bring the entire system down to its knees to institute a new system. Make no mistake about it. This pump that we're seeing here with the market is going to end in a meltdown, which will begin in the debt market and bleed off into the stock market. Again, stop focusing on the stock market. Greg Mannarino looks at the stock market secondarily. Greg Mannarino looks at risk. Risk is the driver here of everything. The debt market is the key. If you can understand that, the debt market being the key to everything here, forget about looking at the Dow Jones Industrial Average, the S&P 500, the NASDAQ, or anything else. Watch what's happening in the debt market. Again, the phenomenon from going from a rip-roaring bear market to a rip-roaring bull market. This suppresses rates, opens a doorway for cash to make its way into the stock market. New record highs. Come on, I've explained this to you 1,000 times, millions of times probably over the last, I don't know how many freaking years I've been talking about this. 10 years, it's not going to stop. It's not going to stop because central banks aren't done. They're not done. Central banks are the enemy, okay? They're pushing their wealth right up to the 1% and 2%ers, or the people that own the stock market for the most part, or large portions of it. Yeah, sure. People have their investment plans in here too. Their rinky-dink 401k plans, whatever, the average guy, the average girl. It's nothing compared to the investments that the 1% and 2%ers have here, okay? And again, the 1% and 2%ers are going to be the ones that get out of this market first. Well, everyone gets left holding the bag, as they always do. You understand? I hope you get it. Anyway, so the story today is not just about the 10-year yield, which is below 4%, and you and I call that one. The MMRI is at 250 as I am doing this video blog. Trading doesn't start for an hour and 15 minutes. We're going to see a sub 250, as we also predicted from, I don't know, a month ago, 2 months ago, whatever it was, and the market is going higher now. As long as they can keep rates suppressed, and they're going to. With regard to rate suppression, people, I don't know another way to tell you this as well. You haven't seen anything yet. You're going to see debt buying, asset purchases on a scale that no one's going to believe moving into 2024. Again, the final pump, 2024, very well could be. And then this entire thing is going to get very real at one point, meaning a meltdown which will begin in the debt market, okay? The real stock market crash that everyone's talking about, that this guy, this girl, everyone's just predicting here, look, you know my take on this. These crash callers, they've been wrong for I don't know how freaking long. I know there's another guy out here with a pretty big following, said this month is going to be the month of the crash and is going to be wrong yet again. He calls the crash every single month, and every single month is wrong. Can't do it. Anyone that's telling you that is only looking for clicks or something along those lines here, okay? Me, I personally don't give a damn about this, all right? I work for all of you. I work for all of you because I want to keep you ahead of the curve, and I think I've done a damn good job at doing that, all right? Betting against the debt, becoming our own central banks here, staying long the market, until we see risk turn around, and we got the best tool in the world to do that, and that is the Mannarino Market Risk Indicator, free to everyone on the planet. Link in the description of this video. I hope you start using it. Take a look at it right now. It's 250. It's going lower, much lower as we move forward here. It's going to waver around, of course, but we're going much, much lower here. 10-year yield, where's that going to go? Much lower too as well. Relative, all the stuff that you and I have spoken about is happening, people. Anyway, with that said, gold, silver, unbelievable here. It's not too late to get in on this, people. You gotta start adding to your physical holdings of physical gold and physical silver, more specifically, and platinum and palladium as well. I also think you need some cryptocurrency in your portfolio, people, and exposure to commodities moving forward. And of course, staying along the market right now, because we're going to all come out of this smelling like a rose, man. You see, here's the thing. We are way smarter, way smarter than those who are trying to destroy us. We're not going to succumb to it. It's not going to happen on my watch. I will not ever let that happen to you on my watch. You can count on it, all right? I'm going to end this video, people. Look, hope you got something out of this. Share it. Get it out there. Those thumbs up are extremely valuable. Please give the video a thumbs up. I will see you later, 4:05 p.m. Eastern Time for my live stream. Let's do this. Let's have some questions. I want to interact with all of you, as we always do, and we're going to have all kinds of fun. I can promise you that, all right? See you later.